Hello everyone, welcome to Baniyakamunafa, and today we will talk about a new IPO at G Infra IPO. So let's get started. So the Jaipur-based company at G Infra Engineering is coming out with its IPO, and the issue is scheduled to open on Feb 26 and will close on 28th of Feb. The price band of this issue is Rs 263 to 270 per equity share of the company and have a face value of Rs 10 per share. The price band of this issue is Rs 263 to 270 per equity shares of the company and a face value of Rs 10 per share. The IPO consists of a fresh issue of shares aggregating up to Rs 300 crore and an offer for sale up to 60 lakh scrips by the existing shareholders. At the upper end of the price band, the public issue is expected to fetch 462 crore rupee and the lot size is 55 shares. This means if you're going to apply in this IPO, you have to bid for at least 55 shares and the company will be listed on both NSE and BSE. Okay, so now let's talk about the purpose of this issue. So the net proceeds of the fresh issue are proposed to be utilized by the company for the following objectives: purchasing capital equipments, repayment of certain debts, and general corporate purpose. Now let's have a look on the business of the company. What company actually do? So the G Infra was founded in 2003 and is a Jaipur-based company. And most of the revenue came from the Rajasthan and Maharashtra and mainly from civil construction, roads and water pipeline projects. And its core segment is road and highway. So the G Infra has completed 13 projects in the past of approximate 1675 crore rupee and having a strong order book of 3700 crore rupee. And over the last 5 years, the company has executed 13 projects above the contract value of rupees 400 million in the roads and highway sectors. And in the last 3 years, it has invested rupees 1.7 billion toward the procurement of the fleet of modern construction equipments to ensure high quality and timely execution. The company currently has a debt equity ratio of 0.9 times in financial year 17, which is expected to be cut down with the repayment of rupees 1155 from the IPO proceeds. This in turn should boost their bottom line margins. The company is one of the few players in India to have owned large fleet of modern construction equipments and transportation vehicles. And in H1 financial year 18, the investment over the plant and machinery formed around 90% of the gross block of rupees 4.3 billion rupee. And over the last 3 years, the company has invested rupees 173 crore toward the machinery so as to reduce the dependency on the third-party suppliers. Now let's have a look on the financials of the company. So between financial year 14 and financial year 17, the company revenue grew by 2.2 times to rupees 1055 crore, while the net profit almost jumped 5 folds to rupees 55 crore. And the revenue of the company has grown at a CAGR of 30.8% from financial year 14 to financial year 17. PAT has grown at a CAGR of 69.8% in the same period, with expansion in PAT margin by over 270 basis points over financial year 14 to 17. The company has earned early projects completion bonus due to its remarkable execution capabilities and currently operates at decent double-digit operating margins. And over the last 4 years, the company has demonstrated a good execution skills with revenue growing at 34% CAGR, one of the highest in the listed space. During this period, the company has successfully transformed from being a subcontractor to a prime contractor. So from these figures, let's calculate the EPS and PE ratio of the company. At the higher price band of rupees 270 per share, company's EPS is 9.87 rupee and the company is demanding PE of 27.35 times. So at this valuation, the issue seems fully priced. And if we do peer comparison with already listed companies, Dilip Buildcon and KNR Constructions Limited, Dilip Buildcon is 5 times bigger than the G Infra, but G Infra has superior returns ratio than peers. So as a conclusion, with an order book of 3708 crore rupee, the company offers strong growth visibility for coming years. So overall healthy balance sheet, good order book, low debt, good growth, and growing infra sector are plus points. And the company is fully priced, 95% of revenue from 2 states only, and elections are also coming in Rajasthan, may affect this. So as a final decision, one may apply for moderate listing gains only, or you can apply for medium to long term also. I am taking a risk, so I am applying in this IPO. You people be wise, do some analysis and then decide. All these points are based on my personal research and study. There might be other aspects also. So please write to us in the comment section below, or you can mail us at baniyakamunafa@gmail.com. And if you like this video, please give us a big thumbs up and make sure you're subscribed to my channel. Thanks for watching.